think equities are really complicated. I think within the equity market, if you put a gun to my head, I'd be short the economy to.
Stan Druckenmiller is a very famous hedge fund manager that has made quite a name for himself, which a lot of people don't quite know the name because he is somewhere on the private side. His track record is pretty profound of nearly making 30% compounding over his years of owning and managing other clients' money. At the same time, in 2010, he retired and started to manage his own money. Here's just some of the larger trades that he has done over the past couple decades. You see shorting the British pound, going long gold, getting into tech stocks, and most recently talking about the subprime mortgage rates in 2006. So, what does this mean? We're going to be getting back into the interview. Some of the highlights that we want to kind of look at is, hey, Stan is saying that there's potentially some downside bad economy coming in 2023. It's hard to calculate this because this is a very strange climate with the inside of the economy. And at the same time, he's going to reveal some of his short-long positions and looking at some of the instruments that he uses to potentially make a fortune from this new economic circumstances. All right, let's get back into the interview.
Just how uncertain for me trying to analyze the environment is going forward. I've been doing this for 45 years. I've studied a lot of economic history, but I've never had a situation where you had free money for 11 years, a very broad asset bubble, followed by jacking up rates 500 basis points in 12 months. So for someone like me who likes to look at history and come up with potential scenarios, this is a particularly difficult period. 2 years ago wasn't so difficult when you had 2 years at 15 basis points and money supply growing at 30. It didn't take a genius to figure out that was a good risk reward. These days things are a lot more complicated, but you just mentioned about everything on our mind. Generative AI, inflation is on our mind, asset bubbles, currencies, all the stuff we usually think about.
So how do you navigate it then?
Well, luckily I don't have any clients, so I don't have.
Well, I have one client, and it's pretty big.
It's really big. I don't feel performance pressure. So historically, I deal in 5 or 6 asset buckets. Tends to keep me out of trouble in terms of playing in an area where I shouldn't be playing at a particular time. And I think it's one of the most important things to do is not to play when you don't see a fat pitch. I don't see a fat pitch in fixed income. It's extremely complicated because I'm in the hard landing camp, probably sometime later this year. But again, this is so complicated, I'm not willing to place a big bet. And even if I believe in a hard landing, which I do, what do you do with 2-year treasuries at a sub 4% with Fed funds at 5.25? I better be right on my hard landing if I want to own fixed income. And then in the longer end, historically, this is easy. If I believe we're a hard landing, I'm supposed to own bonds. But they're not exactly a screaming bargain. 10 years at 3.5 in the U.S., particularly with a Fed that has certainly shown some mettle in the last year, but historically, I wouldn't say Jerome Powell is a profile in courage. So if we get into a hard landing and he moves aggressively, I could see bonds and inflation coming back with a vigor from what I expect to be a lower level than right now. I will say that the response to Silicon Valley unnerved me a little because in 4 days, they printed enough money that basically wiped out the entire reduction of the balance sheet they had done for 5 or 6 months. So if I'm trying to look ahead and anticipate, I don't have a lot of faith in these guys, should we get into a hard landing, that they're going to hold the line and not do something maybe worse than Arthur Burns.
And where does it leave equities?
I think equities are really complicated. I think within the equity market, if you put a gun to my head, I'd be short the economy to the extent I should something pure like Russell 2000. Obviously, I don't want to go into individual short names, but names like that old economy, economically sensitive stuff. But let's just say we're going to have a hard landing and a bad recession in the U.S. What does that mean for NVIDIA? I don't know. I mean, oils and chemicals went up in 73 and 74. Staples have gone up in bad recessions in the U.S. historically. What do I do with a company, if you have a bad recession in the U.S., but it's growing wildly throughout that period because we have an arms race going on in its space? It's not clear to me it goes down. So I think the equities are complicated. I mean, I'd say the one area that I feel reasonably comfortable in is I'm short the United States dollar. Currency trends tend to run at least 2 or 3 years. We had a long one here, over 10 trillion, something like 13 trillion came into the US dollar during the previous decade. I will say, full disclosure, I missed the dollar. It's probably the biggest miss in my career in currency trades. I missed the last 9 months run up in the dollar. I just couldn't bring myself to own Joe Biden and Jerome Powell. But I think now that on a relative basis, the tightening in the U.S. going forward will not be as much as the foreigners now that we've weaponized the dollar, and you've got people like Lula running around asking why we need to be trading in U.S. dollars. By the way, it's not a bad question. Historically, we could be trusted. We had a rule of law, a lot of things. So about the only space I have any risk on right now is in the U.S. dollar. Don't run out in short dollars. I could change my mind in a week. But that's where I am right now, and I'm also long gold, obviously, for the same reasons.
All right, that was an absolutely fabulous part of the interview that Stanley did. Some of the key highlights and key takeaways that we want to discuss is initially his strong opinion of a hard landing / recession coming sometime in later part of 2023. So what does that mean? He gives some details about some of his short and long positions, talking about going short the US dollar and then going long gold, basically saying that, hey, these are the two currencies and commodities that he's going to be looking into. But at the same time, he didn't give a very strong conviction on the sense of really going for it, really giving it all, because he's saying that the climate is such complex at the moment with the very high amount of money printing that the Fed has done over the past, not just the last 2 or 3 years, but just the past like 11 years with very the money printing and then not really adjusting rates until it was a little bit too late. He does give insights on his viewpoints on the current presidential of President Biden, and then also giving some insight on Jerome Powell, where he feels like they kind of pulled an Arthur Burns. So if you're not familiar with Arthur Burns, he's an individual who was the Fed chair basically in the early 70s to late 70s, who had to deal with very high inflation as well. And a lot of the critics at the time was saying how Arthur did not deal with inflation soon enough and aggressive enough. You could see here in some of the charts that inflation went up to 11%, went back down a couple months to a year later, but then ran up quite a muck a couple years later into the late 70s into the early 80s of nearly 13% inflation. So this is I think the overall insight that Stanley is giving to the economy of potentially maybe copying this kind of scenario, but again, not giving the full-fledged betting of giving the large size that he normally trades with on this conviction on this particular trade. And looking at the short side of shorting the US dollar, he literally said, hey, I'm a junkie. I can literally just pull my position and change my mind next week. So please don't go out there and just take my advice for a grain of salt. So I think overall, very interesting interview. I will link the rest down below here. Thank you guys again for watching, checking out the channel. And again, catch you guys on the flip side. Peace.